What up? It's your boy Bazz, and y'all tuned in to another episode of Ian's podcast. Yes, I am excited, and what I'm excited for, y'all already know, man. We're talking about money today. This podcast episode, man, we're gonna be talking about investments, and one investment is an area in particular we're gonna be talking about is the stock market. As y'all all know, I've been keeping y'all up on game on my journey of what I've been understanding, my experiences with investing in the stock and using Robinhood. I'm using Robinhood currently, so I'm gonna be talking about using Robinhood when I'm referring to my methods and when I'm referring to my techniques and how I'm viewing things. So if y'all be like, damn, what platform you be using, bro, or what you got going on, like how you get started out? I actually got started out using Webull, but also use Cash App too. So if you got Cash App, there's a little feature on there where you can buy like shares of shares. So then that's why I got started with the Cash App. Like, you could put $1 into buying like fucking Facebook or Google, which some things cost thousands and hundreds of dollars, but you can buy a piece of an actual share of a company, with a piece of owner, which a share is only a piece of ownership of a company. So hopefully ain't none of that just go over your head. Matter of fact, I'm gonna slow it down real fast just because y'all need to notice, if you know, just so y'all can understand what this whole conversation is really about. A share, when I refer to stocks, stock is a share of a company, which means you got a piece of equity ownership. Equity is ownership, my dog. So when y'all be talking, so when y'all hear the media and all these people that trade stocks and stuff like that, yeah, you can, you know, just as people buy and sell companies, as y'all hear these companies be buying and selling companies, yeah, that's selling and trading stocks technically. But if you think about it long term wise, yeah, you can buy these pieces of company long term wise. As long as they're around, you got a piece of ownership in that business when you buy a share of a company. And some of these companies also offer dividends. Think about it, dividends. And that's one of the main topics we're gonna always be talking about, because that last 4 letters that they talk about, them ends, baby. We trying to make the most out of our current circumstance, and we also trying to build that generational wealth. And we always, you know, we say we the voice of the culture, so we always talking about building that you know, that black generational wealth, which means, you know, making the most of what you currently do have. So not everybody's in a position to go put $1,000 or $5,000 or maybe even $100 into the stock market. So it's figuring out what can you put in there and why. So the first thing I want to jump into is we at month 4 of using Robinhood as an investment platform. And I'm going to tell you about some of the ups and some of the downs that I like about Robinhood. The up part is I love the visual. You know, Robinhood is very good. The whole visual is very, very, very user friendly, easy to use. You ain't really got too much trouble trying to figure out where everything is at. It's kind of, you know, right in front of you, and it's kind of, you know, just catchy. It ain't really like too techy or really just too, it ain't really too much. But one of the things that I don't like is the alerts and updates. They pretty fast, don't get me wrong, they're pretty fast, but when I'm like, me personally, my strategy is dividend investing. You don't really know about dividends and things like that until the actual end of the, you know, closing of the actual market. But they kind of be, they're a little bit slow with updating that. So I'll be finding out about dividends and things about that late. A little bit, but you know, hey, it just come with the game. So that was my only con. Like, you know, we gonna try to keep it all the way 100. I ain't gonna try to sell y'all like, oh man, it's just the perfect platform and everything's so perfect. Now we try to give you real honest reviews and real honest testimonies. So yeah, user phase wise, and that's just basically what they be saying. Like, is it easy to use if you a beginner? Yes. Do it got like all the features you would need? Yes. Now what I don't like also too is for certain features too, you gotta basically apply for. So say like, even when it come down for buying portions of shares on a platform, you gotta apply for. And that's why I say on Cash App, I started instantly with that, because Cash App, that's one of they biggest go-tos, is that like you can buy partial shares of stock. You feel me? So like, you ain't gotta buy like the whole stock. You can buy a piece of that share, which means you still got ownership, but you only gonna have like 0.06 or 0.6, you know, or some, you know, like some shit like that. But now let's get off into the actual experience. not the actual experience of using the actual platform. That's what we just talked about, but the actual experience that I've been having with investing. So over the recent 4 months, I stuck to the same script, the same strategy. We invest in for the purpose of it, for dividend investing, which means I'm going after companies that basically pay out quarterly dividends, and based on the market, you feel me, the market be volatile, which means it fluctuates, goes up, down, up, down, up, down, you feel me? So it's like at the one big bonus will be if you get them dividends that can kind of cover that base too. And one thing I like about this platform too, so as I start getting dividends in, at first it started off kind of slow, you feel me, because I'm building the you building a portfolio. So a lot of people think that, like, man, unless you like and let's remember, we talking about ends making the most out of your current circumstance. So unless you starting the game off and you investing like $1,000 into this particular stock and this particular stock too, then you're gonna start to see like, oh shit, you getting about you get some cheese back that you can really see and kind of really weigh your investments on a bigger scale. When you invest in and you get like a couple cents back, it's kind of small, so you might kind of overweigh that. But when you start thinking about investing, everything is about compounding interest. So one feature that they do got that I end up discovering was you can reinvest your dividends. So basically it's like it take the change or whatever that you make, even if it's a couple dollars. So if you make a couple dollars off the stock, it take that couple dollars. Now so you're talking about buying fractional. Well, they really call it fractional, but I be saying partial because fractional might sound a little bit kind of complicated. But basically buying portions of stock using the dividends that you get monthly. So then your dividends will start to organically start to grow because of compound interest. You feel me? Compound interest is what your credit card company, your banks be using. You feel me? That's why it always feel like it's so much harder to get from underneath them bills once they start piling up, especially if you got loans and shit like that, is due to the interest. But this can work out in a whole different way when it come down to investing. Starting out, I did not do that because I'm the type of person I like to touch and see my money first, and I understand a lot of y'all might be like that too. So you might not. So like for you might be thinking like, oh shit, I probably don't want to do that because I might want to spend my money if I need to or something like that. Well, when you start thinking about investing, that's something that you kind of don't want to do, but at the same time you do want to have some liquid money, which basically means have some money in an account that you can invest with if you don't plan on selling no stock. That's something I also learned too. So a feature that they got on there that come in handy is when it auto deposit $5 per week. You feel me? So at first, when I first started out, hell yeah, I was going crazy. I was trying to build that portfolio, but I wasn't going crazy like that. You feel me? I was buying low entry stock. And we was talking about that too, like Ford was down to like $5 when I first bought it, then it jumped up to like $9. Now you gotta think, if you own a few shares, and I was buying like a share a week, I'll basically investing like that. And I was telling myself, you feel me, if I'm gonna go out, if I'm gonna go do anything, if I'm gonna splurge or anything, I gotta put some money into an investment. So I was basically doing that every week, and also like my discipline. So if I spend money on this, I'm gonna put money towards investing. So I put like $20 in the and then I also had the auto draft to like $5 too. So I was putting more up into. I ain't gonna say I was just putting 20. I was putting more up to, and basically just building up a portfolio and how I was building my stocks. So now I got like companies like DTE, which is the Detroit Energy Company, and then also got like and you think about like Excel Energy, they basically supply, you feel me, Minneapolis, St. Paul, right? These is corporations that supply whole cities. That's why, like, when it came down to picking, I'm picking companies like that. So I picked DTE because DTE supplies the whole Detroit when it come down to energy and electric company. You feel me? Somebody in my family actually worked for DTE, you feel me? So then that was even more incentive, you feel me, for me to actually go and invest in the DTE. And on top of that, it's also a dividend stock, you feel me? And being from the city, I'm familiar and I know about it, but it's also like, you feel me, to grow and know more about it. I forgot, me and somebody were talking about what Warren Buffett say he invests in the stocks that he know, right? But I be looking at things like from this: when a baby come into the world, a baby know nothing. You feel me? You know based off of experience. You know based off of what you are exposed to. You feel me? So the more you expose yourself to the actual game, into like, you know, industries, things that you are interested in, you feel me, the more the opportunity the more you gonna have the opportunity actually retaining this shit and being able to apply it. That's why I feel like he said go after what you know, because it's the interest of, you know, the interest that's gonna help you retain the information. You feel me? Like if you're gonna go learn about cars, or you love cars, you're gonna be paying attention like a motherfucker, versus if you're going in here to learn about bugs, your attention span, you ain't gonna really pick it up, because it's not something that you really familiar with. It ain't something that you really like that. And I ain't gonna really say familiar with, but it ain't gonna something that you gonna like, so you ain't gonna really force yourself. But if you really like, but if it's for the money or something like that, and you really interested in, you know, want to grow your money, you might learn about this industry just because that might be the next step for you to learn some more money. So it's like, you know, that's how I be looking at it like that. You feel me? So of course, you know, you gotta always be a sponge, and it's gonna always be easy to go after things that you know, but you gonna always have to expand what you already know, because you don't know enough. The man that thinks that he knows it all really knows nothing. You feel me? The man that think he knows nothing really probably know the most, because he's open to he's open to knowledge. He's open to growth. And that's how you got to be with these stocks too. And that's why a lot of people don't really invest into, you know, they don't invest into like one company. They have a diverse portfolio. So then that's another thing that I was learning, especially over this last 4 months, was having a diverse portfolio, but understand what does that technically mean. So in other episodes, you might have heard me speak about one was REITs. REITs is real estate investment trust. And basically REITs are companies, corporations that have a portfolio of assets from the real estate game. So if the real estate industry is doing good, these REITs companies are paying you large dividends, because these companies gotta basically pay out 90% of their capital to their shareholders in order so they don't get taxed, and basically get like a certain type of tax. And because they pay it out to you, you basically assume all the tax. You basically assume majority of the tax liabilities, and you actually get taxed more just due to that income, just because of the type of income it is. And then the next one was index and ETFs. So these is basically index, and ETFs is basically like, these are another one of companies that also are big portfolios of other companies that are like, you know, the top 500 companies in like either in certain industries or in certain markets. So you can buy up like, and what I mean by certain industries, it might be like a SP 500 of electric companies. I mean like energy companies or something like that. And I'm not 100% certain if that's one. I have one, but I ain't gonna. But I don't want to, you know. I ain't gonna like gas y'all up. Long story short, but that'll be one though. Like, you feel me? And it'll basically be a portfolio full of like top performing electric companies that are in like the Nasdaq, which is basically a market where you could go buy stock on. I mean, or market where basically companies put they trade on, basically. Long story short. So like at the Nasdaq, it's like a Walmart versus long story short, that's like a market, you feel me? Long story short. So going back into the whole stock market game, so you got your ETFs, you got your index, which those are another different type of like basically portfolio. You basically invest into a whole portfolio. So if you want to be like, damn, I don't know what type of energy company I want to invest into, you can go get a index or ETF and then basically invest into like a whole. They take your money and basically they disperse it into this whole portfolio. Like they divvy it up, you know. And a lot of those come with dividends as well. A lot of those are dividend stocks. So I got an ETF. I got the ETF. I got the index. So that's what I know. I know learn about those too. So I just broke that down to you. With basically like the ETFs, the indexes are also like they're basically portfolios of industries, or either industries or emerging companies, or specific areas, companies in specific areas. So basically like it'd be companies out in China, basically like the top emerging companies out of China, or something like that they'll put into a portfolio, and then they allow people to come and invest to. So your money will be dispersed amongst these top companies, and then, you know, they basically give you dividends back from that. And so then, yeah, so I was looking into that, so basically I was maximize on my portfolio, my dividends, by using like a strategy of like basically just putting five or more a week, and just basically just buying low entry stocks. And then another thing that I ventured off into, like what that we were just talking about in these last 3-4 months, was REIT investment stocks, which is real estate investment trust, basically. And then also was index ETFs, which is basically like another like portfolio like type stock. When I say portfolio, it's a bunch of companies or a bunch of different stocks basically put into one stock. And that's what's create the value of that stock, is the companies that they invested into, and you going off of that. So basically those are largely influenced by those industries. So it might be like the top, like what I was saying, it could be the top energy companies in America, or the top energy companies in Asia or something like that, and they have like a ETF or index. And then another industry too that I was that I spoke about too was investing into actual energy company. You feel me? Speaking about that DT Energy, and looking at companies like DTE and Excel. When I started looking things from an investor standpoint, and you start thinking about longevity, because dividends, you want to think about longevity. It's not a quick hustle, like I was saying. Like, you feel me? You're not looking to actually like trade stock every day type deal. You looking, I mean, like, of course you want to, like, depending on what it is, you might want to, you know, like, you want to pay attention to it daily, because that's part of the stock game. But you thinking about it from a long-term standpoint, like who gonna be around the longest, who got a proven track record, so then that way that you can receive those dividends long-term. Or even if they go through like cutbacks or anything like that, you know that this has been a company with a proven track record, that they're gonna come back to those dividends. So dividends gonna rise again along the end business. And they've been through, you know, they try to show that they didn't been through the hard times. And those companies, those energy companies like DTE, like, think about it, man. They like this, what I was saying. My mindset when I went into it was thinking about, all right, what is their business model? Who are they supplying? How long have you been supplying them? DTE supplies the whole city. Well, I ain't gonna say the whole city, but they supply Wayne County, which is basically majority Detroit, and a couple of cities on the outskirts of Detroit, but it's majority of Detroit is Wayne County. So they supply predominantly a lot of Wayne County and southeastern Michigan with energy. So I was like, damn, if they supply a whole basically section of a state, and one of the you know, Detroit went through its own financial struggles, but it's still a large major city. You supplying a whole large major city. I feel like that was a needed investment. And plus, energy is something that we gonna always need, and right now energy isn't free. So I feel like there's gonna be a bill that we gonna always have to pay. And even if you supply in the whole city, you got guaranteed, you know, basically you got guaranteed business. Now, not saying that is the most smartest or the most strategic way of going about it. I'm just keeping it all the way 100 and letting y'all know this was my process of going through. I looked at their track record, and I also was looking at how they did over the last 5 years. And then as far as and then I also looked at things like their dividends. When it come down to companies like DTE, if you look on for them over the last 5 years, they have actually improved. They have improved 46% to be exact, which is, you know, an increase of $35. You feel me? But excuse me, if you think about that, if you own dividends, I mean, because that's also a stock that paid dividends. So if you had owned that over the last 5 years, you have made $35 off of just owning that stock. But then you have also made 5 years worth of growth of dividends from a growth stock. You feel me? Long story short, like, so that money is, you know, basically, and like what we were saying, if you and if one of your strategies is reinvesting them dividends that you are earning, your money, like that's a stock where it's making your money grow. I mean, like, you know, like your money's working for you. Long story short, like that's one of them stocks where you can just put money in and it's gonna grow for you. And that's DT Energy. So that was one of the strategies I got into, really just going more in depth and kind of looking at these stocks and breaking them down on a more in depth scale, and not really just like going after for what I know, but going more in depth. So I looked at that 5-year mark and was seeing that it was under steady growth in the last 5 years, and then I was also looking at like what was that growth like, and the funny thing about it is you can actually look at the actual dates when a lot of this stuff had dropped, and you can look at what was going on during those times. But then just as far as just with energy, I was also looking at what was that business model like, and how often are these business models changing. For one thing, it's very hard for business. I mean, when you are when you're a company like one of these type of companies, when it come down to states, they can either privatize or have government ran, basically like entities like these, and for disruption in those type of markets takes a lot, like you feel me, because they cover a whole city, they cover a whole region, you feel me, so it takes a lot for their business to actually change. I mean, not saying that it doesn't happen, because you have like your Amazons and shit like that, but not saying it doesn't happen, but but this stock is an increase. What actually the board says, and I'm reading this right now. The board says they expect the dividends to increase on an average of 5%, during the next 5 years. And that's just based off of what it already has been doing. And that just came off of just me doing the research, but like, hey, starting looking at it like from the standpoint of just understanding business and just supply and demand. So yeah, that was one of my recent discovery in investing into energy and resources companies, and like what I was saying, those REITs and those ETFs. Man, and last but not least, before we get out of this podcast, because like I always say, I don't want to talk y'all ear off. For sure, I really don't want to talk y'all ear off. But another thing too, that I was really focused on too, was another feature that they also have too, was understanding interest earned. So they have another part which is good for your dividends. So once I started buying up and I started acquiring, you feel me? I say buying up, but they be saying the word is acquiring all these different stocks. You feel me? We can articulate ourselves on a different level too. Don't get it twisted. But once I started acquiring all these different stocks, they got an interest earned feature. So all the cash that like we was just talking about, like say if you start basically like you got an account where you have your stocks, but then I got money in my account too there. So the account that you have on Robinhood, you get an APY. Which was basically like it's the annual percentage yield, and it's basically how much you make off of the interest of just having your money sitting in their account. Because man, they invest in your money, they using your money as well too. So just for you letting your money sit there, they give you a percentage back. So I was able to, because you gotta apply for this feature too as well, I was able to test it out and see what it was like during the whole month of June. And don't get it twisted, we're making the most out of current circumstance. My portfolio is not like one of these big time YouTube investors and all that type of stuff where they got 100,000 and all that type of stuff in their investment. We working with our current circumstance, and I'm a newbie into the whole investment world, but like I said, we doing this together. And the last thing that I learned was interest earned from your APY. So Robinhood right now has a 0.30% APY, which is cash, and they tell you what's your cash earning, interest earned. And one of the cool features, what I say, this is a user friendly like type of site app too. You can see how much interest you earned throughout the month, no matter if it's cents or dollars. So I started out, I put a little bit more, because at first I was thinking like, damn, I can use this as my actual bank account, but not like use like my actual bank account, but not like, but I could, if I want to say, I can use this more like my saving account, which, it is my bank account. I can basically use this like my bank account, my saving account, because it has a little bit more APY. Or I was thinking, You feel me? Or like, cause I just started learning about APY. So then that caused me to go online and start researching APY, and it does have a very good one. But there are some saving account where you have 1.8 and things of that nature. Sometimes even higher than that. But if my mind got to start thinking about shit like that, basically make my money making money for me, like, because then that's another thing when we talking about that compound interest. So even though I only had like I want to say like $158, shit, we gonna keep it all the way 100. I only had like $158 in that saving account. I think it made about a good 10 cent. Oh no. Hold on, it ain't make 10 cents. I can be all the way at 100, which I just gotta find it. I don't know how much it made, but it made a few cents. Long story short, it made a few cents, but which had me thinking, like, if I don't even touch this and I keep letting this make cent after cent after cent, just organically based off of compound interest, this account gonna keep making me money and the money gonna keep increasing. It's gonna start out slow, but if you know compound interest, it starts out slow, but then later on it out of nowhere, like it kind of jumps. So you feel me? Like once it reaches like a certain point, and that's just another thing, and that was just another thing I discovered too. So we still on this road, like Nipsey Hussle say, man, it's a marathon, and life is always gonna be a life learning journey, and it's an investment game. We in it, man. We in it to win it. And by winning it, the winning goal is generational wealth. It is basically in understanding, and being able to have these type of conversations. Being able to be financially literate, but also create a sustainable and also healthy community of investment. And the reason I say healthy is because it ain't gonna be like you feel me, just ripping motherfuckers off. Like we already got corporate America. Like you feel me? Like we already got corporate America. So in our own culture, we ain't gotta be vultures. You feel me? Like, and the reason why we got our logo as a shark, because sharks always continue to move forward. You feel me? Continue to move forward in the water. And there's different variants of sharks. You feel me? There's sharks that swim in schools, and there's sharks that, like, you feel me, like the whale shark, one of the huge sharks, it's a bottom feeder. They learn how to eat off of, you feel me, some of the most smallest, food in the ocean. You feel me? But it's one of the most biggest sharks. But I ain't gonna talk y'all ear off. You feel me? It's your boy Bazz. Y'all tuned in to Ends Podcast. And like I always say, ain't no support like free support. So if you can go ahead, like, share, subscribe, man, I would deeply appreciate it, man. And if you want to just go even a little bit more further, we talking about investments. If you want to help us, in this journey, you feel me, help me in this journey, you want to give us more shit to talk about, let's keep it all the way 100. Give us more shit to talk about, and you want to, you basically want to, keep having this conversation with us, and you fuck around can be honest with us by just becoming a patron. Like honestly, and I'm gonna say fuck around, it can real life happen. That's one of the cool features and one of the cool perks and bonuses of becoming a patron. A patron is like a proud supporter. We have different levels where you can have reoccurring basically merchandise. You might get a shirt this month, hat next month, you might get some socks, you might get some undies, you might get some cool pair of shorts, just depending on what time of the year is and what we feel like, man, will help best benefit you. You feel me? And things like that. By being a patron, we can send out information like that, like, hey, for being a proud supporter, what would you like to have this month, or what would you like to have next month? You feel me? And if you was to put together a shopping list of these, these top 10 items, pick your top 5, and then over the next 5 months we'll ship one of each out to you. You feel me? Those little type of perks. You feel me? Another different type of perks is, you feel me, saying what's up, being able to chime in on one of these podcast episodes and being able to be a guest, but also not just be a guest, but give input on what should be the next direction of an episode. You feel me? Because you might have something of interest that it may be a question that the rest of the world may be asking, but you don't know until you use your voice. And that's why we say we are the voice of the culture, because our voices help empower and inspire others. It's your boy Bazz. Y'all tuned in to Ends Podcast, and like I just said, baby, we are the voice of the culture. Peace.